Hey, good morning, good afternoon, good evening, depending on where you are in the world. My name is Michael Filighera. I am uh, with logicalsignals.com and a little bit of history. I am an Elliotician. I've been doing Elliott Wave since 1989, publishing my analysis since 1991. Um, what we're here doing today is, of course, analyzing your trades, analyzing what you have an interest in. But just to kind of get started while everybody's deciding maybe what they would like to look at, quite the turn of events today. If you happen to be watching, I will. Thank you, Mike. I will go right to GLD. Um, there's been a big turnaround in the market after all of this enthusiasm and all of this, whoo, everything is fine now. After NVIDIA's earnings, it certainly got a turn and totally wiped out everything that was just gained. So that's a whole nother story. First up, we want to take a look at GLD. Um, Interesting. I'm going to put this out at least to the daily because I need to get a little bit bigger picture. I am, well, I'll tell you what, I'm going to actually do gold because it's all labeled. And it's something that I actually do provide analysis on. And so let's see if we can get it. Okay. So on an Elliott basis, and this is and let me see how I can just go a little bit larger, go to that full picture. Yes, you can see I'm out of my 5-year weekly chart. So again, I'm counting up a larger, yes, it did. Um, I'm not really sure what exactly what it was at 747, other than um, there was just a lot of data that was released. Also, I think somebody came out and it was something different that may have had to do with interest rates. And there was some data that was being interpreted as that, okay, the Fed's not going to give us any consideration for lowering in December, something along those lines, I believe, is what kicked it. But it turned, and it for other various reasons. But let's talk about gold here for just a moment. Um, Gold remains in a longer term bull phase. And I'm talking about this is coming off of the $353 low back in 1990, I think it was. Um, so I mean, I can put it just one more. I'm going to go all the way out there. So we got gold. Really, that's the low that it's building up off of, and that low was in 1999, and it was 254. So off of that, I'm counting a larger primary degree 5 waves up, of which I got 1 and 2. Intermediate degree 5 waves up, I've got 1 and 2. So we're down to here in the minor. And so now I can bring it back down to this guy. And what we finished here was minor wave 3. So we're in a minor 4th wave correction. And it appears much bigger, of course, because gold has been going parabolic prior to this, and then suddenly it just slid. So it's still involved. And if you have any understanding of Elliott, the pattern is going to be an ABC. And so we have the A wave and the B wave. We're looking for the completion of the C wave. Gold is kind of stuck right here in the middle because it reacts to other factors that come in. One of them, of course, being an interest rate. One of them, the next one being, what's going on in the dollar. And the third one is just uncertainty about equities. So we had where gold was kind of holding to higher levels because the market was getting chopped up and cut up and going down, going down, going down. Finally, we had that one day yesterday where NVIDIA's earnings came out to put a little relief into all that. Then it's picked up again. So I think gold starts to adapt to that flight to safety or flight to quality or whatever you want to call it. So some cash comes back into gold on that basis. But I think that the market still needs to correct a little bit more. And so what it would suggest is that we still have that support, but I'm looking actually for the market to kind of come down to actually between 3,900 and 3,750 is where I'm looking for it to come down and complete the correction, the 4th wave correction, and then start the rally again. A little bit longer term, I am continuing to look for new all-time highs. In fact, if we continue to just pull this out, you can see where my next band of resistance is. It starts at 49.26 and runs up to 5140. Um, yeah, it does work on a much shorter time frame. But realize that what I'm talking about here, you just keep working it down. So in other words, I can go down to the hourly, and as long as I'm aware of where I am, like that's just the B wave. So there's the A, the B, we're coming down in the C wave. You're going to come up with that same level. There it is down there. So let me go one more. It gives a little bit more. So there we have it. There's your a smaller time frame. And then we have that minor 3. There's the A wave of minor 4, the B wave minor 4, and we're going to come down in 5. So it's 1, 2, we got 3, 4, and a 5 to do. So I do think we're going to get down into here before we pick up that rally again. And so I would think even for the balance of this year, that's kind of where it was going to finish. And I think it'll scare a lot of people once it drops below 4,000 again, because they're using that as a major level. Okay, next up we have EZPW. That's a new one for me. Easy Corp Inc. Okay, if I'm on, let's just go. Let's just go out here. Let me at least put it on a daily so I can get a little bit. Okay, so it does have some history. And I'll go on one more. Yeah, it's got a lot of history. Oh, actually, it began, correct me if I'm wrong, this all started trading in 2020. Would that be correct? One more. No, actually, is that correct? No, 1991. Okay. So there is quite a bit of data on it. So if I had to make a call, I'm going to use my daily. I mean, it's coming off of a low back there, which had been February of this year. And it looks like it did 5 up. That's a very sloppy 3 down, but I'll call it that. 8 are 1, 2, 3, 4, 5. There's another 5 up. It looks like it could have just finished 3 down. And of course, this takes us to this past week where it but that's on earnings. And it might just get caught up in the fact that it's going to be coming down. So I would run just regular fibs here, run up to there. There's your support coming down. And again, I think if it started to break below the daily 50, which is at $15.70, well, you do have support again at 1540, thereabouts. But if it goes too far and you're breaking the pattern, like if this is a 1, 2, a 3, the 4 should not go too much further than that. And as long as that holds, then I'd look for another run up and get above 1946. And what you can do is you can run a fib as this, like this. Actually, I'd have to take it from there and put it over to here. And now you get some levels for where it can come up. 100% would be 1. That's the equality is number 1, but then 1.618 and then 2.618. And since you'd be looking for it to make a new high, you're going up to at least above 1946, and there's your fib level. That tells you about 2025. And it could go higher than that, but then you use the multiples going up, and that's providing that this is correct and that it's a 1, 2, 3. And this is all coming down in a 4. And it doesn't go below that level. Okay. Oh, my other favorite, thank you, is silver. Now I'm going to go to SI, which is the silver futures market. This is the other one that I really have some pretty detailed analysis on. Silver, like gold, silver is actually paying more catch up, right? Because gold really started going, and then all of a sudden silver decided to just really start to expand. One thing to understand is like when you're following Elliott, gold and silver tend to expand or extend heavily extend within the fifth wave. So if we're running a 5-wave structure, which we are here, or running a minor degree 5 waves up, that's in this fifth wave that we get all the extensions. And you see we already got one. And so I'm waiting to get this fourth wave in, and then I'm going to get another, and we should get another one. And here's my targets. I got 57.96, so 58. And that could complete the rally for quite some time. And I'll go out to my maximum monthly chart. But the next level is up here. And this one, actually, the degree sits above these 2 degrees. So I'd be looking more for here than I would here. But that one does still exist, and it is important. And it could finish, and then this would all finish below it. So in other words, it's like if it got to there and then just started to get ripped apart, then it's going to finish everything. That's up to the top level, and that would have to go with it. Again, let me just take this out to my monthly maximum, and you kind of can see, there we go. See, I have an A, B, C. This is 1980, right? So that's the 1980 high. Here's the 2011 high. So if you're used to anything with Elliott wave, this one I'm labeling in a WXY. And you can see why, because it's like big W, and then an X, which is nothing but 3 waves down, and then the Y, and you can see it. There's the Y, and there's the stem. Now, again, as I said before, silver tends to extend massively within fifth waves. So here we are, minor 1, 2, 3, 4. Look at that fifth wave. It's all just powerhouse. And so that's when it happened. So it's following pattern. It's following what we would expect. And so I'm going to continue to look for that. Now, here's the interesting part about silver. Unlike gold, which did not go to a new high, or platinum did not go to a new high in here, silver did last week, or the week of the 1st. So yeah, about 2 weeks ago now. And so this is the monthly chart. Let's drive this down and go to this one. There it is, right there. And so that actually was on November the 10th. And it kind of overnight just snuck up there and got there and then pulled right back, which is not untypical for silver. Reaches a new high, and immediately all the sellers kind of walk in as they start to just take profit and do whatever they do. Now, what it does for the Elliott count kind of puts us into a little bit of it. That's an A, and that's the B. B did produce a new high, so it's what we would consider an irregular B wave, which is where the B wave does go up and form a new high over the A, and that is the new high above the A and above the 3. And so, but in the fourth wave position, it's pretty acceptable, and it's not that uncommon. We get a lot in equity markets, by the way. So we have that, we have the B, and now I'm looking for a C wave. Typically, you're going to look for a fib. Your fibs that go associated with a slightly irregular, even though it's not all that much, but it is irregular, is 1.618. So again, we've come down only to 49. So I'm looking for a minimal come down to 46, down to 45, 30, 35 down in here. That's on silver. But then I have additional. And because I do think it's going to come down quick and they're just going to slam it, my true support that I'm going to think may or may not hold. The first one is 45.35. The second one is 42.73. And then the last one is where this wave would come into 1.618, which is most common is A equals C, but because of this slight irregular, what we look for is 1.618 on a retracement. And that's going to bring us down to 40.92. And then we have this additional right down below at 40.18. Now, having said that, what the market can't do, cannot cross over that low. This low is safe because it was a 1, 2, 3, 4, 5. So it's already completed its move. So that one, it comes in and provides support rather than if it's broken, the count becomes invalidated. It's this fourth wave would have to break down here to invalidate the overall count. And I don't see that happening. If it did, then those are the highs of the highs of the highs for right now. And again, when you take it back out of that monthly chart, I believe it's like we're finished with that Y wave. We're going to do another X wave, and that X wave could bring us all the way back down. I mean, all the way back down, like below 20. So it would be so typical of what silver can and can't do. It just has done it. It's just hit the new high, ran it down, hit another not new high, but got close, dropped it back down. And you can see this went from 49, almost 50, down to 11. This one was 50 down to 363. So here, all-time new high. Where do I think it can come back to in the next wave? Well, if I'm just going to run it from here to here, I mean, this thing could come back down to 16, 17 after hitting wherever it hits. So shorter term, still looking for it to get up here. It may take until next year, like first quarter of 2026. But I think the interest in silver is still holding steady. In fact, this holds these higher support levels much cleaner, much easier than gold does right now. So again, I'm thinking there's a lot of support for silver, and on the belief that it continues to rise. Now, silver has a lot of other little problems with it too, in terms of like as you're trading, and say you're going to take a short position, they advise against it because it's too hard to borrow. I don't know if you're trading equities, you go to short an equity, and they say you can't because we can't borrow the stock. Same thing's kind of happening in silver. There's no place to borrow silver, so you can get stuck if you need it to deliver what you've just sold. So there's that problem, which kind of keeps it well supported, to be honest with you. So that's kind of the picture in silver. Short term, let it come down. In fact, if you're long and you want to add, you probably can. If you're playing it from the short side, I'd look for these lower levels to cover. But I still have a little bit longer term upside, still very much alive. And this is from my friend George. Hi, George. Hope you're doing well. And this is our friend uranium, which actually has gotten a lot of interest lately. But unfortunately, I don't have a lot of background in uranium. This is the monthly chart that we have. But it has really, and I'm going to say this future really didn't come on board until 2019, which makes it interesting. Or Sprott, which, by the way, if you guys don't know Sprott, they do a lot of funds, but they do it in things that they have one in gold, they have one in silver, they have one in platinum. I think they have one, obviously, now in uranium. So they do a lot of rare earth and also just a lot of metals, precious metals. And the Canadian, and not that I'm giving you a pitch about them, but I have a lot of respect for them because they actually do back the trades with the product. And so this is a little bit safer than GLD and SLV. Okay, so uranium, let's take a look. Definitely pulling. Let me pull it down and just look at a 5-year weekly on this because I want to see what this represents. This kind of like a 1-2, 1-2. Boy, if I didn't have, I wish I had a stronger background in this market, because if I'm just taking it off of this, I like this as an ABC down. And now that would suggest, once we're done, that we should do another 5 up. At the best I can count this, George, what looks like to me is that this is 1 of this next 5, and this is 2. And then we have another 1, 2. So if it's getting ready to blast in a third, or 1, 2, 3, 4, 5, yeah, see, it's difficult to kind of put that this completed something from there. It just doesn't appear it, even though the sell-off was intense and continues to be a little bit on the intense side. So again, maybe this is something also just to see about uranium miners, because again, being it's a mining stock, it isn't so much on the product itself as it is the group that gets it out of the ground. And so, yeah, I don't know if there's having a problem there or just that they're taking profit, based on what their needs are. So, but you could run some fibs like this. Again, just using straight fibs. We're already just past 382, sitting right at it, which is a good sign because that is support. Your next support line down is going to go along with the weekly 50 period moving average, which is at 48.64, and fib support right under it, 47.96. So it's kind of a good area. And then 618 at 43.09. I really wouldn't be looking for this to come too much further below that because then it's going to start breaking, which I think if that's going to be 1, 2, and this is 1, 2, this can come down below that for sure if it's not done. Because again, a 1, 2. And what you can do is you can run fibs like this. So I'm just comparing this little one to this little one, and you see what it did? See that 100% came down and hit it, and it's holding it. So if it breaks, then I think we come down to that next level, which I just said was 43. So you have a double there as well. So again, just to kind of open this up so you can see the inside stuff, right? That would be like, if we're looking for like an ABC down, there's the A, there's the B, and we're coming down to 100%. So, and that is actually the most, that is the most common, that wave C will be equal to wave A. And this kind of came down, just broke it a little bit, coming back above it and sitting there. So I would keep an eye, because if it breaks again, the next level is 1.618. You got some support at 47, but on a fib basis here for this C wave, you got it down to 44, which would suggest if uranium acts like if gold or ever sells off, it would be kind of there that it's going to go with it, and that could be strong. So that's kind of uranium. I know there's a lot of interest now in it. The only thing I do is give a shout out for Sprott, because I find them to be an incredibly stable, trustworthy firm. And they have, like I said, they have a gold, they have silver, I think they have platinum, and now I know they have uranium. So Canadian company, and you trade in dollars. So it's pretty good. And I have recommended them for a long time. So that's the uranium one. Let me see. Let me just, while we're waiting, see if somebody else has got something to do. Here as well, it's looking pretty good. It's looking, that was a quick down. Maybe it just needs to drift below there, or that was enough. So A, B, because you got a little nice ABC up. And 1, 2, 1, 2. Oh, well, yes. There's a little bit stronger potential that it's going to come down to here. As you can see what I'm counting. 1, 2, because we're looking at a C wave. C waves are always 5 waves. So 1, 2, and then this would be the third, and it's a 1, 2. And if so, it should start to come down at least to there, and then a 4, and then a 5 back down to here. So I'd say a little bit longer term basis, yeah, probably got a good strong potential that it will break towards 44 to 43 inside there. Bitcoin. Oh man. How about talk about a bloodbath? No, that didn't work, did it? How about I put the right symbol up? Oh, wow, look at that. Down another $2,600 today. I know that there are people that actually follow it, that use it, that do it, trade it. And let me just see, there's that little piece of news. What are they saying? Of course. But I just what I always find kind of amusing. Bitcoin crashes to 88,000, but Cardano's Charles Hawkinson says the path to 250,000 is locked in. Okay. Are you long? All right. So let's take it out, because they do have a maximum monthly chart. Notice how this got left. I obviously labeled this a while ago. And I had it down to where that was a wave two down there at that bottom. Come on. And so I got a 1, 2, 3, ABC 4. The 4 does not overlap wave one, which is like life saving. Either that or it has to be ABC up, ABC down, and now we're doing a C wave up. And that doesn't make sense to be a third wave. Unless the whole thing is forming a triangle, and I don't have enough data because it only started trading in 2017. So based on that, it's in the third wave going up. I have, and then within that, that third wave will consist of 5 waves of minor degree. And here we have 1, 2, 3, and 4. Fifth wave is extending far greater than the third did. Again, considering commodities, and I don't know if we want to consider Bitcoin a commodity, but it's not an equity. And so therefore to say that the fifth wave is the extended wave makes sense. And we got it inside there. So we have 1, 2, 3, there's 4. So I'm looking for 5 up. Now, if it comes down and takes out that 4, then I'm going to say it's done. And that's just wave 3. And we're going through a larger correction before we resume that highway to 250,000, if that's going to happen. So one way, what we can do is we can kind of go, because this is the 4, and if that's the 5. So I would go like this. We can go determine what should that fifth wave look like. Wow. Well, there you have it. It went above the 2.618 because 1 was pretty small. So above that, it went well above it. So this crashing down makes sense because it extended itself pretty far. And now it's just kind of coming back in. And which should have been a normal correction from much lower levels. But because it got pushed up pretty high, brings it back down pretty quick because there's just no support. Right now, we're sitting at support coming off. Well, you have to understand, as a currency, okay, okay, I don't have very much time. Where's it headed to? I think as it's 75, 74. And that's just following Elliott. That's just following where these support lines come to. Boy, that's pretty dangerous. And because I don't trade it every day, I actually don't have all of that information. And I'm going to stop right here because I'm famous for going over my time limit. These move really fast, I have to say. They're good to do. In the meantime, thank you, everybody. If you want to know more about me, www.illogicalsignals.com. There's a whole bunch of information. I do have a trade room. I post daily on YouTube, both as a membership and for and then also just for the general public. And thank you.